Good morning and good afternoon, everyone. Welcome to join COVID-19 impact on the market of South Europe and LATAM. My name is Max, Program Managers of PBox and Energy Box. I'm very happy to be the moderator of today's webinar. And before we entering the webinars, I would like to express our special thanks to Ryden for their sponsorship. And following the last time's webinar focusing on the Spanish renewable energy market, we're going to further explore this market in the first part of today's webinar, then zoom out attention from Spain to South Europe and Latin market. And joining the webinars, we have 6 experts. We have Alejandro Labanda, Jose Antonio Milan-Rano, Pedro Amaro Jorge, Mauricio Fernandez, Nicola Gazdov, and Thomas Garcia. As I mentioned a little bit ahead that in the presentation, which consists of 3 parts. In the first part, based on Spanish renewable energy market, Alejandro Labanda will give us a comprehensive understanding of Spanish PV market from many perspectives. And Thomas Garcia will add more colors on renewable value chain, especially from perspective of COVID impact. Then we will move to the other countries in the South Europe, starting from Pedro Amaro Jorge, who will be updating us the latest development of Portugal renewable energy market. Then Mauricio will share his expertise or his professional insight on the solar project development and financing. Then we turn to Nicola Gazdov. He will share his knowledge on utility scale project development in Southeast Europe. And finally, we will be learning the Latin market with Jose Antonio. During the presentations, if you have any questions, please feel free to submit it by hitting the Q&A buttons on the left side of the screen. As you can see that there are 3 buttons there. You have raise your hand, Q&A, and poll, but we are not going to use the poll this time. And as I mentioned ahead that I'm the program manager for PBox. So what is the PBox or Energy Box? PBox is a vertical media company dedicated to renewable energy. And we're based in China. We're one of the top 3 most influential media in our domestic market. And we aim to enhance the business corporations across the land and inland, and also to promote green energy. Our event held around the world, span Europe, South Africa, South Asia, and up to now we have 12 events in record across the world. And besides, we provide professional and customized promotion plans for our clients and help them to achieve their goals by our networking, such as publication, online platform, international conference and forum, and so on. I'm going to the speakers. I won't use too much time here to give you too much detailed intro of each speakers because I think there will be a more detailed intro of themselves in their presentation. So let's get a quick review. The first speaker is Alejandro Labanda, Study Director of WNEF. So WNEF is the Spanish Photovoltaic Union, which represents more than 85% of activities of the sector in Spain. It is the spokesperson for particularly the entire industry. And Alejandro has 9 years professional experience in energy industry. In prior, he was a senior consultant at KPMG, working for top players of Spanish energy sector. And Thomas Garcia, Senior Director, Energy Infrastructure Advisor at the JLL. Previously, he was the Managing Director of Solar Wind Project Business in Spain and in Portugal at BayWa. He has around 10 years professional experience in the renewable energy industry. And before he started his career in this sphere, he was a scientist doing the research on the solar PV market. And Pedro Amaro Jorge, the President of Association of Portugal Renewable Energy, also known as APREN. It is a non-profitable association, representing more than 80% of the installed capacity of renewable energy sourced in Portugal. And Pedro has track record on EPC and utility business development, financing, designing, building, and management with more than 15 years of international working experience and 30 years experience in top management position. And Jose Antonio Milan-Ruano. He heads up the project and business development activities in Univergy for PV solar and wind projects on a global level. And with over 15 years of experience in business development in renewable energy industry, he has developed successfully business in Europe, United States, LATAM, Japan, SEA, and in the latest 11 years. Nicola Gazdorf, Chairman of Associations for Production, Storage, and Trading Electricity. He has over 12 years experience in renewables. He's also the former business developer director for Jury Solar, co-founder and chairman of Bulgaria Photovoltaic Association, and members of strategy committees of Solar Power Europe since 2010. And Mauricio Fernandez, project financing investment managers at Ryzen Energy. Ryzen is one of the pioneers in solar industry and has committed to its industry as R&D expert and integrated manufacturers from wafer to mold and manufacturers of off-grid system, and also an investor, developer, and EPCs of the PV project. Mauricio has around 10 years experience in project financing and investment, and previously he works for the bank Societe Generale Yao. And kick up today's webinars. The first presentation will be given by Alejandro Labanda. So, Alejandro, I leave the floor with you.
And other related companies. We represent around 85% of the sector with around 450 companies, installers, engineers, producers, distributors, and also we have created another segment this year of storage companies. Now that you know who we are, I will get straight into the topic, the Spanish PV market. I have prepared two blocks, the first for utility scale plants and the second for self-consumption. Starting with utility scale, I have started with the regulatory framework. The regulatory framework of PV in Spain is mainly composed of these two pieces of regulation, the Power Sector Act and the Royal Decree of Renewables. The main idea of this framework is granting a specific remuneration to renewables has to cover their investment and operation costs and provide a reasonable return on the capital invested. This is a quite complex scheme that is performed by defining standard facilities for all renewable technologies with standard investment and operating costs that serve to calculate the remuneration parameters. The rate of return of the investment is fixed for regulatory periods of 6 years, and the remuneration is updated every 3 years and paid monthly. This scheme was introduced in 2014, applying to all existing installations at the time, and that still represent the majority of renewable capacity in Spain. If new facilities after 2014 wanted to be under this scheme, they had to win it in an auction. In other words, it was not automatically assigned to new renewables. So this is a schematic of how this scheme works. Plants receive the market price, and also they receive certain payments, the remuneration to the operation to cover the OPEX, and the remuneration to investment to cover the CAPEX, and also to provide this minimum reasonable return, this rate of return that is guaranteed by the regulation, and now it's fixed at 7.4%. And as I said before, how this is done, as I explained earlier, first, each facility is assigned to a standard facility with the standard CAPEX and standard OPEX. Then, consider the estimated income from the market and the guaranteed return on investment. The remuneration parameters are calculated and approved by the ministry every 3 years. As I said before, this scheme was aimed for existing installations at the time. So they were all put in a bag and they were put into this scheme. But what about the new ones? The Power Sector Act restricted the granting of this scheme, as I said, to only the winners of specific auctions. So if the ministry of the government wanted to more installations to be built and more projects to be developed, needed to celebrate auctions. So in 2017, auctions were celebrated. These were technology neutral auctions that provided this scheme that I just explained. The auctions were in no means less complex than the same scheme. So as the product that was offered in the auction was a discount on the recognized investment. But anyway, of this in these auctions, PV was awarded around 4 gigas of new capacity that was to be commissioned before the end of 2019. And of these 4 gigas, around 3.7 gigas were connected on time. And this was the result. We had, as you see, we had quite ups and downs in Spain in PV capacity over time. We had a really ambitious regulation in 2008, and that resulted in a big spike of new capacity. But after that, we had seen quite a mild adding of capacity, and after 2014, really small new additions. But then again in 2018, we have another big spike with this 4.2 gigas that has allowed us to be the leader European market in 2019 and the 6th market worldwide. So after this great year, after this record year in all senses, what will happen next? That's the question that many people is putting themselves on. So we have an ambitious plan ahead. We have for 2030, we have an ambitious plan which is called the PNIEC. As for those who don't know, all member states of European Union member states have to prepare a national climate and energy plan. In Spanish, that's called PNIEC. That's our name. That has to include the policies and energy mix projections to meet the 2030 European Union targets. Spanish PNIEC was judged by the Commission as one of the most ambitious of the European Union, and in fact, for PV, it foresees a capacity of 9 gigas in 2030, from around 9 gigas today. That means 30 additional gigas for the next 10 years. So that's good prospects indeed, but the question is not if these prospects are good or bad, because we know that photovoltaics was indeed below potential in Spain. But the thing is, how do we get there? How can we be able to really meet these ambitious figures of capacity? Well, it's obvious that we have these 3 drivers of the market that we all know: the auctions, PPAs, and merchant. In fact, PV has been competitive in both of them in Spain. Has been winning competitive in technology neutral auctions. Has been competitive in the PPA segment and is growing every year. And it's also entered in a new dimension with merchant projects that are under development in Spain at the moment. And from UNEF, we believe that these 3 pylons, these 3 drivers, should be equally needed for meeting the targets. We need all the 3 options, all the 3 possibilities. But all we need is stable deployment. We have seen how it's been the deployment of PV capacity in the past in Spain, and we cannot repeat the same mistakes again. We should learn the lessons of the past, and we should provide a stable deployment, mostly because we have leader companies in the PV manufacturers industry in Spain, of trackers, power electronics, EPCs, and many others, structures. It's key to provide stability to the sector, so the economics and the employment impact for the country are better. We need to provide this stable growth with stable deployment of the capacity. And for that, we believe that the main instrument, the main tool should be auctions. That we propose technology neutral pay-as-bid auctions, but in any case, either it's technology neutral or technology specific, but we need auctions. We need auctions in the short term because we need this market to be deployed at a continuous and stable rate. We know that the marginal market doesn't provide the required investment signals for renewables. How can a marginal market provide signal for technologies that don't have marginal costs? We at UNF have been claiming for this during several years for the reform of the marginal market, but for now, until we find an alternative to marginal markets, the only way to create a powerful investment signals are auctions. So they provide a price for energy for developers. Fortunately, the current government is considering to implement these kind of auctions. In fact, the draft Climate Change Act includes a review of the Power Sector Act, introducing them. But the problem is that the draft has only recently been sent to the Parliament, and it has a long process ahead. Its final approval shouldn't be expected before 6 months or a year. As this may be and in view of copy prices, in addition, we have claimed the reform of the Power Sector Act via an urgent decree that will allow the celebration of the auctions in shorter time, even in this 2020. Another thing that we need, another challenge that we face to development of renewables in Spain is network access. Network access regulation framework has barely changed since 2000, the year in which it was introduced. And preconditions to request the permits are very easy to meet. Expiration period of 5 years hasn't been applied. The financial guarantees were very low up to 2018, and this was the result. We have already granted 88 gigas, and in process of obtaining the access permit, 33 gigas. I don't know if you remember the figure of projected capacity for 2030, but it was 39, I can recall you. And you can see that we have way higher permits granted for the capacity that we need. So there's real projects in there. There's only agents taking this capacity to speculate with it. At the moment, we don't know. Fortunately, the government is aware of this and is at the moment of passing a new regulation that will tackle this issue. We need higher preconditions for requesting the permits, and we need also transitory provisions for these permit holders so they can decide if they pursue with the project or they leave it and they leave capacity to any other agents that will come after them. Another challenge that we face is, as in any other market, as in any other country, we need shorter administrative processes. Well, the administrative process in Spain includes a number of procedures with DSOs or TSOs, with the municipalities, and also with the autonomous community or the ministry. We need another previous authorization, construction authorization, construction work license. We need all this, and it should be as it is. I mean, we are not asking for a relaxation of this kind of requisites, but we, for example, think that we should implement more digitalization, more simultaneity in between all these procedures, so they can advance, avoiding this bottleneck of waiting for the previous authorization, so they can move on. More or less in Spain, development processes of PV is really competitive. It can be developed in 18 months or 24 months, but still, I think the construction phase is 5 months. It makes no sense that we are way longer tramiting the plant than building it. And if this was not enough, we have COVID, as you know, and my colleagues will stand over this, so I will not talk too much, but still, as you see, apart from this line, from this gray line on, which social distancing measures started in Spain, we have seen how the wholesale market prices have dropped quite a lot. And RES share has increased and has been in daily average, as you see here, above 60% many days in April and May. Now prices are starting to recover with the economic activity, and see prices are now in the range of 30 euro per megawatt hour, which is more or less standard for June in Spain, which we don't have a specific high demand and stuff. But what if we have a big what if here? What if the project developers see this as a fast forward of the future of a higher share of renewables in the market, as the new normal in a few years? So if I am about to sign a PPA at the moment at 40 euro per megawatt hour, which is more or less the price that is being negotiated at the moment, what if I fear that in 3-5 years, I don't know, I will see these prices on the market, these 8, 5, 11. I will fear that I'm missing some big opportunity here for signing too fast. This may delay this negotiation, might delay the PPA segment, and in some cases might even cancel these deals. Well, this was it for the utility scale. I will just have just a few slides on self-consumption. We also at UNEP represent the self-consumption business, and we are very proud of it. In 2019, we also had a new regulation on self-consumption that corrected all the wrongs from the previous framework. We have, as you can see, many options here. We have individual and collective, and we also have behind the meter and through the network facilities. There's no virtual, but it has to be in proximity. But all these facilities are also permitted. What is the economic framework? Well, the economic framework is like that of any energy efficiency measure. The energy generated by the self-consumption is not valued at a specific tariff, at a specific rate, but it still is savings of the bill. So you have less energy extracted from the grid, so you have to buy less energy from your supplier. So with these savings, you repay the initial investment for the rooftop, for the PV. The thing is, with this scheme, as you may have understood, the higher the savings, the higher the electricity consumption is similar to the PV production curve. I mean, if you reduce the surpluses, even if they are remunerated, I will see that in the next slide, this kind of scheme, it works better for if you produce at the same time that you consume. So you avoid paying the price signal for consumption, which is way higher than that of surpluses, which are valued more or less at the wholesale market price. So that means that industrial and commercial facilities are the ones that take the lion's share of the capacity that is being installed, because they see the higher profitability of these facilities. As I said, we have surplus remuneration. We have a simplified compensation for facilities lower than 100 kilos. And we also have the sale to the market that is eligible for all installation, but it's mandatory for higher than 100 kilowatts. In the first case, that goes against the bill. I mean, that generates an energy value, and the energy introduced into the grid has a value at the wholesale market price, and this creates an income that is subtracted for the cost of the bill. So you reduce the bill. It's not considered economic activity, so you don't incur in income tax. And we have the other option, that's the sale to the market. That is mandatory for all installation, but you don't have limits to the income you get. You can get all the income you have. This is not related to the bill, but you have to establish financial guarantees. You have to contract with a representative, and you have to pay the taxes of the generation in Spain. With this new royal decree, we also had these new property schemes going in. This has allowed that the plant owner is not the same that the consumer that is below the facility, that gives the options of going under this kind of structures in which the promoter has the financing of the facility and gets into a construction contract with the installer and under a maintenance contract with the O&M, and then has another contract with the consumer to repay this facility. That can be PPA or efficiency contract or O&M, and then it may have a purchase option at the payback of the facility. And as a result, we are seeing a boom in self-consumption capacity in Spain until 2019, which we have been doubling every year, more or less, of the last 4, the capacity being installed. And for 2020, we expected to continue this growth and being around 400 or 600 megas. But it's true that self-consumption will be hardly hit by COVID, as we all know, because if these projects, if this capacity is being implemented, it's been built by SMEs and industrial and commercial companies. If these companies at the current moment have any spare cash to invest in something, and they are hit by the economic crisis, it's unlikely that we put this money in self-consumption. But still, after the economics are passed through this crisis, we expect that this recover and takes the speed that it was before. Well, great, thanks all of you. I'm waiting for the questions at the Q&A, and happy to be answering them.
Thank you so much. Thank you so much, Alejandro, for such informative presentations to intro the Spanish market. The next presentations will be given by Mr. Thomas Garcia. He will introduce us for specifically how the COVID-19 impacted this industry. So, Mr. Garcia, you have the floor.
Hi, good morning. I think I was on mute. You should be able to see my screen now.
Yes, I can see. Yes.
Okay, very good. Please. Very good. So, good morning to everyone, or good afternoon, good evening, wherever you are. Thank you very much to Energy Box, for giving us the opportunity to share some thoughts about the impact of COVID on the renewable energy market, in particular in Spain. And first of all, I hope everyone is safe and healthy, either at home or at the office, like I am today. So I will I will say a few words briefly about who we are in the Energy and Infrastructure Advisory Team at JLL. Then I will go through the different impact that COVID is having on a number of dimensions across the value chain in the renewable energy space in Spain. And I will finish with some remarks. So just a few words. JLL, as many of you may or may not know, it's a professional services firm specialized in real estate business. We are a large company, about 94,000 employees. Within this large team, there is a smaller team that looks into renewable energy transactions. This team has a significant track record. As you can see, there are more than 60 transactions, 9 billion euros of capital raised, 15 people working in 2 offices in Europe. And the type of services that we provide to our clients are those red boxes at the bottom of the slide. Primarily, we help complete transactions. So we perform sell-side and buy-side mandates for people that want to buy or sell renewable energy assets, either under development or already operational. We also help people raise capital, typically equity. We help people structure debt facilities We also do some strategy consulting, evaluations, and we are also advising regarding PPAs for both buyers and sellers. So this is in a nutshell what we do. I'm happy to have a conversation if needed. Now, let me jump into the matter. As we all know, COVID is changing our lives. It has had a significant impact across the entire world, I would say, in many different sectors, and also into the renewable energy sector as well in Spain, of course. But the impact of COVID has been different, or has impacted different dimensions. I call them dimensions. You'll see what I mean, to different degrees. So in the next slide, you will see exactly what I'm talking about. So I have selected 8 of these parts of the value chain or dimensions of the renewable energy space. And in this slide, we can see how the impact has been quite different from one to another. So macroeconomics, very high impact, as we will see in a minute, regulatory environment, developing, construction, etc. So I'll go and discuss in detail or in some detail, also mindful of time, the impact of COVID on each of these dimensions. So with regards to macroeconomics, I think this is applicable not only to Spain, but across most nations in the world. We have seen how GDPs have crashed really, and this is going to have huge economic impact across all sectors in the economy, of course. Taxes will go up in order to pay all of the measures that different governments are putting in place. Inflation is also very likely to go up. Country debt and debt prices will go up as well, despite central banks keeping interest rates very low or zero in many cases. And there is also a significant deglobalization effect. So we have come to realize how dependent we are on foreign nations, especially on China. So perhaps governments will try to deglobalize the economy a little bit. And then finally, on human behavior, just the fact that we are all wearing masks now, for example, or we are a little bit scared, and the social distancing, all of these things mean that we are also changing our behavior. So very high impact, or very significant impact with regards to macroeconomics. What about the regulatory environment? And remember, I'm talking about Spain here in particular, so the renewable energy landscape in Spain. So I would say very low or low impact, to be honest. Just some examples. Just a few weeks ago, we learned how the new law for climate change and energy transition was approved in the Council of Ministers and sent to Parliament to be discussed and eventually approved. This is a very, very major milestone, I think, for the renewable energy transition in Spain, and that is moving ahead despite the COVID crisis situation. With regards to the Royal Decree for grid access, that is also seeing some progress. So it's going through the procedural steps before getting approved. Now it's in the Consejo, the State Council, for comments. On the flip side, though, perhaps, and this is to be seen, but perhaps the so expected renewable energy auctions that Alejandro has also mentioned in his presentation may be delayed, but this is to be seen. With regards to all the development and permitting activity, I think there is mixed feelings here. I would rate it as a medium impact. Of course, these ratings, by the way, are very subjective. So I will be very happy to hear disagreements from the audience, but this is our view. So on one hand, we are seeing how all the public administrations that take part on the different steps in the permitting process, like municipalities, ministry, Red Eléctrica, the Direcciones General de Industria, all of these institutions seem to be a little less responsive with regards to making those permits going ahead. However, we have seen, or we continue to see, a very, very active development activity. Just as an example, only in April, during the month of April, so right in the middle of the lockdown period, we saw an additional 6 gigawatts of new grid applications. So this is, again, very significant development activity through the lockdown period. With regards to construction, again, we rate this as medium impact. It is true that construction was totally stopped for 2 weeks during the severe lockdown period. And some EPC providers that we have spoken to have also reported some delays across the value chain in terms of, delivery of components. So of course, this is part of the global economy. It has been impacted. Logistics, supply chain, all of that has had an impact. Moving things through customs has become a little more difficult. So we do see some degree of impact of the COVID-19 situation for construction. What about, a key value driver across the renewable energy sector, which is power prices and PPA prices? Alejandro has also alluded to this thing. I have to say that wholesale power prices in Spain, well, actually across Europe, I should say, have actually been consistently falling, not just during the COVID crisis, but for the last 5 to 6 months. And this is primarily due to lower oil prices, lower gas prices, lower CO2 emissions, not only as a result of the decrease in demand that has been caused by COVID. Of course, even on this kind of not so bullish situation for the power market, COVID comes into play, decreases the demand by 20-25% in Spain, and that of course drops or drives prices even lower. So we have seen, as also Alejandro alluded to, very, very low prices in power prices in Spain. And in turn, this has also, of course, had an impact on PPA prices. So I would say that PPA prices have been also falling in the last 6 months or so across Europe. So the kind of the plain vanilla pay-as-produced solar PPA has probably fallen somewhere around 4 to 6 euros on average. Of course, this will depend on different factors, primarily technology and country, but they have fallen. But again, only a portion of this drop can be attributable to COVID. The rest of it is just, following what power prices have been doing. As a result, what we are seeing is, people becoming a little more creative in order to define new pricing structure for these PPAs that can, to a certain extent, mitigate this COVID effect. So we're seeing how, off-takers and sellers and buyers are negotiating maybe tranches or selling portions of the power, different pricing structures in the PPAs. Importantly, and this is something worth highlighting, this seems to be, especially if you look at the futures, how they are trading, especially Cal 22, Cal 23, and 24, and so on. This seems to be a short-term temporary situation. So we do expect, prices to be at the same levels as pre-COVID in the long run. With regard to financing, so this actually comes from the previous slide. Lower power prices and lower PPA prices mean basically less revenues when the banks do their debt sizing exercises. So basically less debt, less amount of debt fits into a non-recourse project finance scheme. And this in turn results into lower equity IRRs on a levered basis. However, it is worth noting that The financing conditions, so basically the risk perception that financiers are taking with regards to financing renewable energy plants with some degree of merchant exposure have not changed or have not significantly changed. So that means the spreads, DSCRs, tenors are pretty much the same as they used to be 3 months ago pre-COVID. So as a result of these, lower equity IRRs, some sponsors, and I highlight the word some, not all of them, are just in a sort of wait and see mode, hoping or expecting power prices to recover. Let's see what happens. So I rate this as low impact. With regards to transactions, which is basically our business, we also see low impact, to be honest. We do see transactions continue to take place. So people is selling and buying assets or portfolios in development states, construction states, or already operational. What it is true, though, is that the prices at which projects are to be sold, especially RTB projects under development, are likely to fall. So we have had a good number of conversations with both developers and investors, and they both seem to agree that the prices that were paid maybe 6 months ago, sometimes north of 120,000 euros per megawatt peak, are difficult to achieve today. So it is likely that there will be a significant adjustment there. And again, we as financial and transaction advisors at JLL continue to participate in many of these mandates. And finally, investors' appetite, both national as well as international larger funds. Even on the contrary, we are seeing how bigger pots of money coming from either pension funds, infra funds, and of course the oil majors that have lower cost of capital are coming into the renewable energy space, sometimes even very quite aggressively. So just to give you a sense of numbers, we are seeing post-tax unlevered equity IRRs lower than 7% for projects with partial, so not full, but partial merchant exposure. So just to wrap up, some final remarks. So first of all, if we look at the power sector in general, I think it's fair to say that COVID-19 has only had a mild impact on this sector, especially if we compare the power sector with other sectors like transport or banks that have been significantly more severely affected by COVID-19. In fact, I would dare to say that the renewable energy sector in Spain, at least, has been to a certain extent largely unaffected by COVID. Of course, there are some exceptions, as we pointed out: construction stopped for 2 weeks, public administration some slowdown, and PPA and power prices falling. But except for those exceptions, I think the renewable energy industry has not been very significantly impacted by COVID. It is also important to highlight the fact that all of the dimensions, the 8 dimensions that we discussed, are of course very closely interrelated. So what happens in one part of the value chain, of course, does affect other parts of the value chain as well. And my final message is a positive one. I just want to finish my presentation with a very bullish and positive message around the renewable energy sector in Spain. I think it has a very bright outlook, primarily due to the fact that it makes sense economically. So if you look at the market and the economics with regards to power prices and LCOEs that renewable technologies can achieve, there is a profitable business case to be made, and that's why investors are looking into it. Importantly, as we mentioned, Long-term power prices, we don't see a lot of impact. And second reason is because I think governments, public institutions, both at national as well as EU level, are extremely supportive. And there has been lots of debates around, renewable transition to play a major role in the economic recovery after COVID-19. So this is what I wanted to share with you. Thank you very much for your attention, and happy to take questions afterwards.
Thank you so much for Thomas Garcia. And the first two presentations, I think it did provide pretty much clear the structures of Spanish renewable energy market. And I do notice that some good questions have been raised from our audience. I encourage you guys to keep your input, and we will take care of your questions and get all these questions addressed in the Q&A sessions. So the next presentations will be given by Mr. Pedro. He will be looking at or updating us the latest development of the Portugal renewable energy market. So Mr. Pedro, I leave the floor with you.
Okay, thank you very much. Let me try and see how I can share my entire screen as soon as it shows up, or a window application, which works also. Can you please let me know if you are seeing the presentation?
No, for now.
Now?
We cannot see. Please try again. Yes.
Well, it says here that it's showing. Let me go back to the previous. Okay. Can you see it now?
Yeah. Cool.
Are we okay?
Yes.
Well, first of all, thank you very much for the invitation to bring Portugal to this panel. It's very good that my colleagues and previous speakers already went through the Iberian electricity market, the wholesale market, because Portugal and Spain share the same market. It's a unique Iberian electricity market. And also the implications regarding COVID are basically the same. So as they were speaking, I just removed some slides so we don't make this repetitive. And so I'm going to focus this on a different approach. And I'll be more than happy to take questions at the end. And just to congratulate the previous presenters, because their presentations were very thorough and quite strong in the sense of showing exactly what is happening. So let me just go through the point of what is APREN. And so we represent all technologies in Portugal. And from all the renewable power installed, we represent around 92% of all the renewable power installed in Portugal. So our associates represent 92%. Just to share with you what were the Portuguese targets in terms of electricity, and starting by looking at 2019, we had 56% of all electricity consumption from renewable sources and 44% from fossil fuel, and that allows us to actually avoid 15 million tons of CO2 emissions. And going back to the impact of COVID, the impact that we saw on the first 4 months in terms of electricity consumption in Portugal was that we came from a point where, excuse me, renewables represent now 72.1% of all electricity consumed from January to April, which if we look at the cumulative year compared to last year, you can see below what happened for the first 4 months of 2019. And if you see the 59.2%, and then you look for the first 4 months in 2020, you see that renewables represented 72.1% of all consumption. So the good impact that we had on the electricity market is that you had a higher share of renewables on the electric system, of course, because demand came down and because of merit order, renewables were able to sell more electricity. Now, our targets for 2020, according to our last directive, is that we need to include 59.6% of renewables in the electricity consumption. And when we look at the 2020 targets now, what we have promoted by the government is that we need to undertake one auction of some 700 megawatts of grid capacity, including storage. I'll be explaining that later on. We need to award 250 megawatts of licenses for hybrid projects, which can include wind, floating PV, hydro and PV, and the blend of it. And we need to have new 700 megawatts of power by 2020 in order to achieve 1.5 gigawatt by the end of 2020. Of course, due to COVID-19, some of these projects will be delayed for 2021, but we are still waiting for the statistics from the Director General of Energy to tell us exactly where we stand in terms of the deployed power projects. Let me just go through the Portuguese National Energy and Climate Plan quickly. So as you can see, when you compare 2020 to 2030, you see that we need to increase our share of renewables in electricity from 59.6 to 80. Our heating and cooling consumption from renewables need to increase from 34 to 38. And in transport, renewables need to come from 10% of energy consumed to 20. And we also need to increase our interconnections on the electricity grid from 10 to 15%, both with Spain and from Spain and Portugal, meaning Iberia, to France. So these are the basic targets. In terms of renewable electricity coming from energy, these are the targets that we set for our 2030 plan. So as it was mentioned previously, our plan is also very ambitious. If you look at what we have installed at the end of 2018 and what we are intending to install at the end of 2030, we are going to double our capacity. We need to keep in mind that Portugal is 5 times smaller in terms of population than Spain, and the GDP is almost 1/4. So when you look at this, you see that we need to install from 700 megawatts to 9.3 gigawatts of PV, which grid-connected centralized will be around 8, and the self-consumption energy communities will be around 1.2, 1.6. And the other renewables represent an increase of around 300 megawatts, where it is included wind float and also floating PV and concentrated solar power. Now, this is what we designed previously to the European Green Deal and to the climate law. Portugal finished their carbon neutrality path at the end of 2018. And this is what we see our future coming into. So if you look at 2030, this is our energy, electricity matrix, where we have PV, wind, hydro, natural gas, pumping, and also we start to include batteries. And it will be around 30 gigawatts, which is more or less, the number is not exactly the same. But what we need to look is to the path up to 2050, where we are going to be 100% renewable. Now with the European Green Deal, this can happen earlier. And this will include distributed electricity generation, storage on batteries and green hydrogen, and we will be removing all of our coal from the electricity generation by 2023. So we have around 1.5 giga of coal, which will be decommissioned by 2023. So I'm going to include here a new variable, which I think is very important for PV, which is green hydrogen generation with electrolyzers. So Portugal has established their will in terms of carbon neutrality pathway to include green hydrogen on the energy matrix. And this is an important thing because we understand that project financing now it's well established for wind, for PV, and for other sources of renewable energy. But when you bring the complexity of an electrolyzer and you start to have on the same IPP, both generation, storage, and you can actually use the hydrogen either to sell it as a feedstock product or to balance the electric system. So this brings a new complexity. And so project finance strategies need to start looking into this and see how this can be either financeable or bankable under a project finance structure, because as we know, the leverage required to recover the economy is so huge that we can't just simply not use project finance structures to do this. So the government is basically promoting generation of green hydrogen, ensuring and creating an internal and external demand market, meaning that we are putting conditions to create a green hydrogen market for Portugal, and then for Iberia, and then to sell it outside of the Iberia into other European countries. And we are establishing now a public consultation regarding what the strategy will be and how this will be used. So basically, why this makes sense for Iberia. If you look at this slide, this is a recent study from Solar Power Europe with the LUT University. You see that Iberia as a region has the highest renewable potential to actually generate any type of energy. So it can be electricity, it can be to generate hydrogen, but better than the installed capacity, when you see it, is that by far our growth, our, let's say, basically growth potential for renewables, it's much higher than any other region in Europe. So we need to really think that we can be the new, let's say, powerhouse for electricity and energy generation to the remaining of Europe. And this opens a new market for Iberia, Portugal, and Spain, and solve new possibilities to recover from the recession that was caused by COVID-19. So we had the highest unemployment went up, GDP came down, public debt went up, and so energy and electricity is being announced by the European Commission and by the Euro Council to be the way to move forward from economical recession. So basically, the key findings, and just highlighted the one in green, is Europe can achieve carbon neutrality by 2040 being cost effective. And one of the tools that it's important to do that is that green hydrogen, which is generate hydrogen through electrolyzers with renewable power, will be a crucial tool to do this. Again, I remind you that financing green hydrogen is something that hasn't been done before under a project finance structure. So we have a lot of work to do to make this bread and butter to actually be used as deployed way to have fuels that are not from fossil origin, but from renewable origin. And basically, what we are going to do is adding H2 to PV power plants to use as an hedging mechanism. Investor expectations of solar PV with H2 business generation are already being looked into the country, and we are developing with the government. APREN made part of the group for the national strategy. I did it myself, and so we came up with a number of conditions to create a market by generating a way for an off-taker with investment grade being purchasing for 10 years, an X amount of hydrogen, and let that create a market and take it from there in terms of bringing it to full market. So this is the economy that we are looking for in terms of hydrogen with renewables, and all of this will be blended together. Now, just to give you a flavor of what were the 2019 PV auctions. And in 2019, we had these three stages, which was a qualification, a bidding scheme, and an awarding scheme. And to go on the bid, you had to do a down payment of a bond of 10,000 euros per megawatt. Then you go on an online platform bidding process. And if you got awarded, which is it was a reverse auction, you will have to pay a 60,000 euros per megawatt to start developing the project. And this has a timeline, and if you don't comply with the timeline, you lose the bond. Now, the main results that we can look is, if you see, this has the way that the participants got awarded. The difference between the colors is that the blue ones are for fixed tariff, which was one of the auction schemes to get access to grid capacity. And the other is a system contribution, which is the promoters and the developers that got a connection point awarded. They need to give a contribution to the electric system, and they can sell electricity on the wholesale market. And if you look at this, you will see that we have the records of 14.76 euros per megawatt hour from ACU, and we have a contribution to the electric system from Iberdrola around 26.75 euros per megawatt. So this was a very, very competitive bidding. And basically, when we got to the average was the feed-in tariff regime, the average price was 22.3. And in the contribution to the power system, the average contribution was around 20 euros per megawatt hour. So these are massive numbers. Now, what do we have different from 2020? So the government is doing an auction for 2020. There were forecasted or they were planned 2 auctions, but regarding COVID-19, we are going to do only one, and then we need to recover this on the next auctions until 2027. And so it is a 700 megawatt grid capacity auction, technology specific, only PV, and it's on the south part of Portugal, Alentejo and Algarve. And we don't have time to go into details here, this is to give you a flavor, and if you guys want on a different forum to discuss this further, I'm more than happy to do it. But basically, this will be the 3 systems that you will bid on to get access to the grid connection. So one is a general compensation to the SEN. So you sell on the electricity market, and then you need to pay a contribution to the electrical system. And this now, instead of being euros per megawatt hour, is going to be in euros per megawatt in terms of installed power. Then you have a general remuneration scheme with a fixed price. It's more or less like a one-sided CFD that you always, if the price is up, you pay to the system. If the price is down, the system pays to you. And so over the 15 years, you maintain a fixed price. And then you have a flexibility option where we are going to provide system services with either batteries, green hydrogen, or concentrating solar power. And once the market goes up a certain price level, you need to pay to the system. And if it doesn't ever go up, you will be remunerated for the assets that you have installed in euros per megawatt per year. And so I finish here. Thank you for your time. I'm more than happy to answer to a couple of questions in case you find that interesting.
Thank you so much for Mr. Pedro for the impressive all-round introductions of Portugal market. So next is a presentation should be given by Mauricio Fernandez. Let's go start the project financing knowledges with Mauricio. Hello, Mauricio.
Hello, good morning, Max.
Yes.
Okay, let me check my presentation. Can you see my presentation?
Yeah.
Okay, perfect. Well, good morning. I am Mauricio Fernandez. I work in Recent Energy as Head of Investment and Project Finance for Latin America and Southern Europe. Thanks to PVBox to organize this webinar. It's a pleasure to be here with you. In my presentation, first of all, it make a brief introduction for our company, what we do, and which are our business area. Then I will comment on what are we doing in our division regarding the financing of the new project and the new waves that are coming into the market. Well, we are a relatively young company. We were founded in 1986. We are one of the world-leading manufacturer of photovoltaic module. We are listed on the Shanghai Stock Exchange, and currently our price is around 1.7 billion. We started as a module factoring company, but currently we cover the entire value chain from the project development, EPC development, and O&M service, as well as the entire area of the project finance and asset management. Well, here you can see some data about our project. Currently, we have 1.5 gigawatts of installed capacity, 700 megawatts under construction and online service, and our next project with a pipeline of approximately 1.2 gigawatts. Well, our global presence, we are the 5th largest modular producer with an installed capacity of the 11 gigawatts per year. The 70% of sales are made outside of China, and our gross margin is over 20%, one of the highest in the industry. Okay, finally, we can show main partners in the area of project finance. You can see here the ranking top tier 1. Okay, our 3 main business area is one of them, the entire business line of module manufacturing. The second, the engineering and construction area, EPC, as well as the O&M service, are both our plant or third parts. Finally, the management of our asset, the sale of energy for our plants. In the manufacturing area, we have acquired a storage company to complement our solar panel business, and there's the whole sector will focus in the medium term. Well, we have two new strategies, where we always in search of new materials and increase the performance of our modules. For example, 3 models of 500 megawatt panel that we have recently introduced deliver about 31% more power than the average panel installed, which is 380 megawatts. Decrease the level cost of the energy, LCOE, by 6%. Well, this is our business area, and finally, I show our global network, especially it should be noted that in Europe we have 2 engineering centers located in Spain, in Alicante, and in Germany, in Nuremberg. This is not reflected in this slide, but we have recently opened an office in Brazil to increase our presence there. Okay. Our vision of the future of the solar financing, a new way to financing the projects. With the COVID current situation, although some projects have slowed down, of course, the appetite of the investor, as says Thomas Garcia, has not decreased. On the opposite, more and more investors are coming in with the appetite to invest in the sector where there are good returns. For example, with the 10-year US Treasury bond yielding 0.5%, many of the largest investment funds are creating a renewable energy vehicle to introduce in the sector. Well, I show you this slide. We are the company in the sector with the best ratio Altman. We are very careful with our debt ratios. Was the factor that when there was the way of bankruptcy company in the sector allowed us to live safely. In the operation, our debt limit is currently 63%, one of the best in the sector, which gives us a final strength. We show how careful we are when developing our projects. This is the slide of our operation. Do this control. We cannot take all the project development operation as we would like. For example, we have a country, Brazil. I can put an example. I'll give you an example. Many operations or many operators go to the action with price of the $70.5 per megawatt to secure the connection point and access to the spot market, because then the energy in the spot market is $70 per megawatt. And in Europe, where the price in spot market are 15 or 20 euro higher than the average of the PPA offered. But the problem is when you want to finance in certain projects, bank usually ask for a PPA already signed in order to make the project bankable. And for this reason, we are working in the securitization of the Polar project. For us, the securitization of the solar asset is the way to becoming the next hotspot in the solar project financing. Recent Energy is now actively planning the securitization and expect to begin the whole process in the first quarter of the next year. Because of COVID, we slow down this process. The sale operation of the solar project is a general trend right now and the future. On the other hand, the demand for funds for the construction of the power future plant continue to grow rapidly, of course. The ABS, the asset securitization of the photovoltaic power, will be one of the most applicable and important financial resources to cover the future financing in the sector. The asset pooling allows the issuer to remove specific asset for their balance sheet. And in addition, ABS provide investors who were exposed only in the unstandardized assets to the broader range of the industry. This capital market offers long-term, lower-cost fund than the commercial bank, for example, or traditional circuit of the bank. The lower-cost financing associated with the ABS accelerate the reduction of the leverage cost using the energy asset and increase the competitiveness of the PV compared with the other type of energy. Well, we see how the structure to carry out the securitization will be with the project that we have in our portfolio at the present. For example, in Mexico, Australia, Vietnam, Kazakhstan. On the other hand, with the 10-year US Treasury bond with a current yield of 0.7%, project 2 or 3 years ago were not attractive to certain investors, have now become very attractive. In developed countries, investors now with an IRR for 5.5 or 6% become an investment target. On the other hand, it's important in this aspect, it's already a reality the LCOE of the solar and wind project are the lowest in the energy market. For example, as a result, for a project with a probability of 6.2% with a equity cost kind of 10% and debt cost of 6%, the LCOE of the solar project is around $33 per megawatt hour approximately. Okay, it's a general picture about the green bonds. No? The issue of the green bond is increased every year for the following reason. The duration to achieve the financing of project with a commercial bank usually takes 4 to 6 months, and the speed that the opportunities are being generated in the sector, company or like us are looking for faster alternatives. One this way is the issued bonds. The regulatory issues in Basel II and III only project considered very good get the right balance of the debt and capital ratio, because for the capital consumption of the bank, a good or optimal project consumes much more capital, and sometimes we don't get the optimal point of the financing. Finally, there are very good projects that do the regulatory issues cannot reach the optimal debt equity point, which we are working on the next 3 ways to achieve the optimal level of financing. In this case, the first one is the project securitization with the creation of the new Dutch market, stock market for renewable project, call it a NX exchange. We can list our securities, specify the parameters of the transaction, and issue securities in the primary market, and the different projects where the financing can be obtained for the creation of the SPV. This is very interesting. The use of the no PPA bond. My last slide, I show you our last issue. Very interesting. And the third one, and this is a hotspot right now, is the creation of the drop-down vehicle. We are creating project financing vehicles from before obtaining the ready-to-build projects, along with the investment bond, where we get the co-development and financing outside of the banking circuit. For example, this last one, this is a project in Australia, Canarea 134 megawatt solar plant. No, we raised 90 million senior security note issue. Okay. you can see the data of this issue. No, it's triple B rated by Fitch, investment grade. The interest is very interesting. It's fixed at 3.90%, tenor 20 years. This last year is 1.65. Normally, some banks ask minimum 1.8 or 2. And the most important thing about this bond issue, this is the first bond raising deal for a merchant project in this history, and we are very proud about it because we issued it without PPA. Investment grade for fully contracted renewable is an achievement that would not be possible in any country, but due to the longest history in Australian electricity market, as well as Australia's strong regulation framework, made it possible. We believe, and this is important, the same will be the case for the most of the Europe. For example, we are looking at option in Spain right now. It shows that the rating agents are willing to look into the more fully contracted government type of renewable stream. And this is very exciting. We are look some opportunities primarily in Chile, this kind of issue of bonds. And after COVID, we were looking in Mexico, but the new regulation introduced by the electricity authorities there in Mexico, we are stopping right now in this area. And well, this is basically my presentation. Thank you very much, and I am waiting for your question. Thank you.
Thank you so much, Mauricio, for sharing us the investment and the financing knowledges of solar project and some projects you are doing now. And the next presentation will be very interesting. Then Nicola will sharing us some utility project development knowledge, especially in Southeast Europe. So, Mr. Nicola.
Hello to everybody. Just let me share my screen. Okay, I hope that's working now. Okay, do you see my presentation, Max and everybody?
Yes.
Okay, great. So thanks a lot to PV Box for organizing this webinar and for inviting me to contribute with a quick overview of the utility scale project development in Southeast Europe and the impact of COVID-19. Sorry about that. So I would like to thank the previous speakers for actually making it much easier for me. Great overview about what's going on in Spain, in Portugal, in the LATAM markets. So obviously some of the issues are quite similar. Of course, there are regional differences, and clearly the markets in Southeast Europe are less developed compared to Iberia, for example, and also to a big extent compared to LATAM. So I'm actually going to give you a quick overview about APSTE. This is the Association of Production, Storage and Trading of Electricity, which is based in Bulgaria, and I'm the chairman of this association. Then I'll briefly outline the situation with renewables in Southeast Europe, what the outlook is for the coming years, and then of course I'll touch on the topics of COVID-19 and its impact, and also the role of renewables in the recovery. So basically what would project development and realization bring in the next couple of years. So our association has been established actually in 2019, so it's a fairly new one, but some of the corporates here you might recognize, especially the bigger ones like Siemens and also Hex Solar, which has built multiple projects also in LATAM, some of the bigger projects in Mexico and Chile. Also companies like Sonotec, some big consultancies and smaller ones, PV Consult, Resulta, IPS, etc. So what are we doing? So what is the goal of this association? Basically, we are trying to support the cost-effective transition to a sustainable and low-carbon power sector in Bulgaria and across Southeast Europe, and to create an investor-friendly environment for the development of distributed power generation. Obviously, one important thing, as mentioned in the previous presentations, is to simplify the legal administrative procedures for new projects and for creating the right environment in terms of how these projects are going to be financed without feed-in tariffs, basically PPAs or merchant models. And clear also from the title of the association, energy storage is one of the topics that is key for us, and we are pushing a new framework in terms of legislation and regulations that would allow for creating viable business models in that sphere. UPSTE is a member of Solar Power Europe and is also partnering with the European Association for Storage of Energy. And here I will not speak about the association much longer. So basically, what was the deal with renewables in Southeast Europe? Clearly, it was a fit-driven type of market environment in the previous wave, 2010 to 2013, 14. Different types of development. So basically, wind was the first technology that was developed in these markets, especially in Romania, Bulgaria, and Greece. Croatia was a bit slower, but in a more steady way. So the market environment there didn't lead to a boom and bust cycle, whereas in Bulgaria, Romania, and to a certain extent in Greece, we saw boom and bust cycles, less so in wind and much more in solar. And currently, of course, there are some new developments which I'm going to mention a bit later. So what are the goals of these countries? Here I'll give a quick overview of the national energy and climate plans of some of the countries. So apart from Serbia, the other ones clearly members of EU, and as such have issued their plans. So as you see, much less ambitious, obviously, compared to Spain and Portugal, but still, in terms of the market size of these countries, not so bad. So Bulgaria is planning for about a bit more than 2 gigawatts of new solar projects in the coming years up to 2030. Less ambitious in terms of new wind projects, but our opinion at UPSTE is that these goals are going to be adopted and are going to be higher when we get closer to 2030. And this is something that we see in terms of project development and also in having informal conversations with policymakers. Romania, a bigger country, obviously 5 times, more or less 5 times more people living in the country, and the economy is bigger than Bulgaria, so it's no surprise that also the plans for expanding the renewable power generation in Romania are more ambitious than the ones in Bulgaria. Greece, again, almost 5 gigawatts of new solar until 2030, and roughly 3.4 gigawatts of new wind projects in the pipeline. And Croatia, okay, clearly it's a smaller market, and the plans are not as impressive perhaps, but actually the plans for let's say solar 672 megawatts and wind 630, again our opinion is that these numbers are going to be exceeded when we get to 2030. So this is more or less what's been put in the current legislative framework, but not what the market signals and the project developers on the ground seem to be considering as the number that's going to be achieved. Serbia, again, no national renewable energy sources plan available. And as you see here, only a couple of wind projects developed, virtually no solar or very little solar generation. But again, like most of the other countries in the region, Serbia is very dependent on coal generation, and the dependency here is roughly or even exceeding 2/3 of the power generation, and Serbia is in the course of getting or opening the several chapters of EU membership negotiations. So we consider that the power sector of the country and the economy needs to comply with EU environmental and energy regulation at some point. So these numbers are going to be affected clearly. What was the impact of COVID-19? So as you can imagine, and as we've seen elsewhere, before COVID, the prices were going up. During COVID, there was a slump and consumption went down, prices followed. So after COVID, and this is the short story clearly, recovery is expected. How quickly and if we're going to get to the levels at the end of 2019, beginning of 2020, it's an open question, but I tend to share Thomas's opinion that he outlined for Spain, that we're going to get to more or less the same levels fairly quickly, perhaps at the end of the year. So what happened even during the crisis is that the M&A activities on the markets throughout Southeast Europe were not severely affected. Much to the contrary, actually, it's a very vivid market, and projects are being sold and bought throughout the region. So we had a couple of deals in Bulgaria, also in Romania, for wind projects, for solar power portfolios. And there is a clear incentive, especially in times of crisis, for investors to chase after stable cash flows, which the existing operational power plants are able to provide for, thanks to the feed-in tariffs or green certificate schemes that they enjoy. New project development in the region, just like in Spain, for example, we heard, and in Portugal, is still ongoing. So clearly, to get a PPA signed and to get financing in this environment is not the easiest thing to do. So many ongoing projects of members of our association and companies that are close to it are currently on hold. But again, there the expectation is that by the end of the year, this is going to change. So here I have a couple of slides showing basically the development of market prices throughout Europe. I don't want to focus on that, but if someone wants to take a look, it's going to be shared after the webinar. What is interesting perhaps is to see what was the development downwards in the first weeks of March up to the end of May. So market prices went down, and clearly that's going to have some negative impact also on how renewables are perceived in terms of both creating price stability in the future, but also, as Thomas rightly said, perhaps financiers are going to interpret or might interpret this current crisis as an omen to the new normal. So it's an open question still how long-term financing for renewables is going to take shape in a new normal way after this crisis is hopefully soon over. Again, here developments in Bulgaria, I don't want to focus on that. So at the end of my presentation, I would like to say a couple of words about what the current situation with the recovery plans that the European Union holds for renewables. So obviously you're following the development, and I'm not going to surprise you that the Green Deal has not been scrapped as many perhaps hoped. It's actually now a key pillar of the recovery plans of the EU, and some of its parts are very interesting for developers and for the long-term development as such of the renewables markets, especially in less mature markets like the Southeast European ones. So perhaps the most interesting for developers is Invest EU. This mechanism is going to provide for de-risking instruments for investments, private investments through budget guarantees, but also like the bigger framework of Next Generation EU. This is the 750 billion euro proposal of the Commission that's in line with the EU Green Deal. Is supposed to use the rolling out of renewable energy projects as one of the key pillars of the economic recovery of the European Union, and this is hopefully going to take place as proposed currently, as being discussed, as a combination of loans and grants, but also as some guarantees. So perhaps the EIB, the European Investment Bank, might become something as a financial backer at the end of the line for commercial banks, and is going to take some of the market risk that is currently creating uncertainty for developers and investors. There are also other instruments that are interesting for renewables, and especially in these heavily coal-dependent countries in the region, like Bulgaria, Serbia, Croatia, Romania. Actually, less Serbia because it's not still a EU member, but the other countries are, all of them, also Greece, heavily dependent on coal still, and Greece is the only country in the region that has clearly put a date on exiting coal, even before 2030. So the Just Transition Fund is going to provide support for these regions in transition, and especially for the mining industry and for the coal generation industry. And this is something that might also be translated in direct or indirect support for developers and renewable power generation projects. So perhaps to just say a couple of words at the end, there is still no unitary model for supporting renewables or for financing renewable energy projects in the region. Greece has established a system of tenders, which is very helpful for developers and for securing financing, obviously. So it's a competitive one. Market prices are, let's say, reflecting the risk perception of investors, so quite far away from the ones we see in Iberia, in Spain and Portugal, and it's rather in the mid 40s euros. Last year it was in the lower 50s per megawatt hour. Romania had until a couple of weeks a ban on having longer term PPAs than 1 year. This was removed, and actually a procedure is ongoing that was started by the European Bank for Reconstruction and Development. A consultant was hired to advise the government and the regulator in Romania for creating a system of tenders similar to the one in Greece, perhaps. So this is also going to be supportive for developers in that country. No such thing on the horizon in Bulgaria, though. In political terms, it's quite hard for policymakers in the wake of the 2020 boom and bust and the following retroactive measures. It's costly for politicians to perhaps to create such a system of tenders in order not to be perceived as being too generous with investors once again. And Croatia has also allocated a capacity of 670 megawatts for solar plants, a bit more for wind wind projects. The tendering system is not yet defined, so we don't know how effective it's going to be. But this is already incentivizing developers on the ground, so we see quite some projects under development, and it's going to be interesting development to follow. So that's it for today. I tried to be quick, and I'll be happy to answer your questions afterwards. And once again, thanks to everybody before me who was able to put so many facts on the table, and many of the general arguments are valid also in Southeast Europe. Again, in a less mature environment in terms of how the markets here are structured. Thanks a lot, and let me stop sharing my screen.
Thank you so much for Mr. Nicola sharing his insight on the utility scaled PV project development in South Europe, and also the how the COVID impact on this market. And the next constructive presentations, and also the last presentation today, will be given by Mr. Antonio. Mr. Antonio, are you there?
Can you confirm that we are seeing the screen of my presentation, Max?
Yes.
Okay, super. Thank you very much to everyone. So, given the time that we have, I think that from my side, the idea is to give you an overview about what is already happening in the American markets, especially in the ones in which we as University Solar are developing and promoting projects, and what's the impact of the COVID-19 in these countries in which we are already operating. Okay, in order to give you a brief overview, an additional overview, in order to complement with what is already happening with in the renewable sector, it's necessary maybe to remind that most of the countries of Latin America are as well oil and gas producers. Okay, so in the last months, well, they have been suffering some sort of perfect storm, coming from oil war price started by Russia and Saudi Arabia and continued by American and Canadian producers, that has well start at the beginning of the pandemic, and that has led to the OPEC, the G20, and the International Energy Agency to promote an agreement to reduce the world supply at a minimum of no less than 10 million barrels per day. It's evident that these scenarios powerful impact to the Latin American crude oil producers, and many of them as well has long-term energy contracts linked that are indexed to oil prices. So you can imagine that oil company stocks has dropped a lot, and in the middle of this turmoil and with these reductions over the table, Mexico has refused to reduce its production to meet the 23% cap proposed for all the countries. And finally, and probably having the USA as one of their protectors, they have achieved reduction on this production of only 6%. Later we are going to continue speaking about Mexico, but I think that this gives us an additional information about what the surrounding environmental of this energy market in Latin America and what has been suffering. Well, the impact on this COVID-19 we are seeing obviously in the decrease of the demand, impact as well in generation, transport, and distribution, which largely depends on the nature of each country, economic activities. And, well, I think that the consequences are not symmetrical in this case because you can see a strong decreases in Chile, Peru, and Brazil. In Peru, the demand has decreased to level of 30%. Probably led by, well, were the countries that acted first in order to arrange and set up the lockdowns. And well, in the other side, you can see that Mexico and Nicaragua has been more lax in measures, and the decrease has been in an average of 10%. Other important factor that will be linked to the utilities and the stress that they could have in liquidity and treasury, caused by, of course, the drop in the demand and the obligation that they have for contracts, long and mid-term contracts for fixed prices that could probably lead us to request additional financials needed. Well, in countries like Mexico, we are going to be able to request the suspension of the administrative deadlines almost for a certain time. Okay, this is quite important. Of course, all the developers and sponsors must take a lot of care with the bond deposits and the deadlines that could be in the middle. Of course, there's a possible impact of financing of new renewable energy projects that will depend largely on the duration of the pandemic and, of course, the resources that will consume, but as well linked to the impact on the electricity demand. Okay, the relationship also could be extended to the PPA signed and the situation of the takers. Okay, public companies with financial problems. Okay, it could be an additional problem, but well, I think that the lenders will be a little bit more conservative, and well, could be probably affect the level of leverage and the cost of financing of the projects. Another problem that we are seeing and suffering, unfortunately, it's that we have sold projects to and subject to achievement of administrative milestones within a specific period. So there's no time to regret. It's time to speak with the sponsor or long-term investors and negotiate, and well, of course, to let them understand that this is an unexpected situation that every one of us are already suffering, and this is the time to be constructive. Well, Latin American market, on renewable energy side has a lot of dependence of auctions, because probably you perfectly understand that it's the best way in order to obtain long-term PPAs. And well, we are seeing that few auctions has been delayed. Chile has delayed their auction until November, and Colombia seems that has done the same, and probably we are going to have a new one for October. It's important to mention that this auction will give stability to the markets and will be one of the drivers to get back a certain stability to these markets. Of course, it's important to mention, and we are seeing an impact, especially in certain countries, as Colombia in this case, the delays due the interruption of the supply chains, limited entry of workers to the sites, and obviously to the circulation of people, the limitations that already we are seeing linked to the state of emergency of the lockdown that we are living in these countries, and well, probably will drive to some projects to be delayed. Of course, another important issue, especially in the project development, is the renegotiation of the surface right contracts subject to specific periods for obtaining the PLA. So, well, as I mentioned before, this is the time in which regret doesn't make sense, okay? So it's the time to be constructive and take a seat and speak with the landowners in order to let them know that the circumstances are probably not the best to everyone, but maybe we are going to, unfortunately to us, we are going to need to pay an additional price for this. Getting a little bit deeper into what is happening in the project development day by day and showing us how has been the impact of this COVID-19 on the project development side, what our teams are facing day by day. Well, regarding authorities, and speaking about Colombia, authorities and utilities in general have tried to migrate their operation to adapt virtually, which has been possible in most of the cases to trying to establish the activities remotely. Okay, and well, we are seeing that we have been working with certain operative and doing things with certain response. Limitation of entity response. Well, as a result of the health emergency, several entities response for authorizing environmental permits, road concessions, among others, has been forced to reduce management capacity. In some cases, freeze or delay. But we are seeing that day by day the activity is recovering, and we are having answers regarding ANLA or DAA activities and archaeological studies. We are starting to have response at certain time. Well, it's obvious that all the negotiations, and you know perfectly that project development requires a lot of human interaction, especially on the relationship with the landowners. Well, it's we are already trying to keep everything and keep the contact through telephone and remotely. But of course, it's not the same, and we're going to see and check already. The consultants, well, from the consultant side, we are interacting perfectly well with them through remote sources. The field activity has been the one that has been more affected, of course, with soil studies, topographic studies, identification, constitution of the assessments, and, well, of course, this is something that it's already stopped. And of course, the projects under due diligence, the interaction through the remote process from legal and technical Q&A has been working on. But of course, we have a couple of projects in which the site visit of the technical advisor, it's already on a standby until circulation of people will be allowed. And well, due diligence process linked to what I mentioned, it's already stopped. Looking at what we are seeing in Peru, we are seeing a huge reduction in the activity, especially until June 1st, in which most of the pre-operational studies has been almost without any kind of response. The Energy and Mines Ministry has been, well, almost closed. Since June 1st, we have been seeing some sort of recovery into the activity, okay? As well, with the owners and, well, the relationship, it's been through telephone or conference, video conference. It's curious to mention that we are already working in few projects in the jungle of the Amazonas, the Amazonic jungle, and well, it's obvious that the landowners with which we are trying to rearrange meetings, they are not completely happy to welcome people coming from the capital or big cities. They have established some sort of security period that not less than 45 days since the state of emergency will be lifted out. Okay. So, well, due diligence process as well, as I mentioned, well, interacting with the Q&A process and waiting till the emergency will be lifted in order to restart with the visit. And well, we have arrived to one of the hot spots. Okay, that is the current situation in Mexico. Well, coming back to my introduction, I let you know that Mexico is one of the biggest oil producers of the region. Mexico current energy policy under the presidency of López Obrador is based on recovering oil production as one of the star measures of his fourth transformation. And well, it was the main reason why he doesn't accept this reduction in oil production. Okay, linked to this, we have, and probably you have heard that they have let us know that through an agreement to guarantee the efficiency, the quality, and the reliability of the national electric system, and issued by the National Center of Energy and Control, the CENACE, this drive them to the cancellation or reduction of the dispatch in photovoltaic and wind energy matters, which justifies the due measures to the affection derived from COVID-19, and the federal government has considered that the intermittent generation of wind and photovoltaic power will be affect the reliability of the national electrical system. He gives priority to plants that use fossil fuels such fuel oil and coal. Well, before to let you know my personal opinion and humble opinion, I think that it's maybe interested to let you know with numbers and data what this really means. The states affected by the cancellation or reduction of the dispatch in photovoltaic matters are Sonora, Aguascalientes, Coahuila, San Luis de Potosí, Nuevo León, Tamaulipas, Zacatecas, Chihuahua, Puebla, Guanajuato, Veracruz, well, in 28 parks with an installed capacity of 3,270 megawatts. Investments of 3,900, more than 3,900 million, and more than almost 17,000 jobs. Okay, for wind farms. Sorry.
Excuse me, Jose Antonio. It's me, Max. I'm speaking. I'm sorry that we are almost reached our time limitations. So please try to be quickly.
Yeah, of course. I'm going to finish up. And according to sorry, Max.
Please, I mean, the webinar is going to be automatically closed in maybe 10 minutes. So please be no price if you
2 minutes.
click the button.
2 minutes. Okay. So okay. So well, the impact of this, it's gonna be huge. Remind us what is happening in the past in Spain with the retroactive measures of the government. So well, I think that the situation it's quite bad. And well, there's no time for more. I have an optimistic message in order to let you know that, of course, the renewable energy must drive the energy transformation. It's a really good opportunity to meet the international climate goals. And well, I think that will be one of the triggers in order to find the economic recovery, and well, many other things that in favor to the time will be shared with you through the presentation. Thank you very much, and it's a pleasure to hear you. Goodbye from Tokyo. Thank you very much.
Thank you so much, Mr. Ant, for taking time from your busy schedules. I never thought that today's webinar will, especially the presentation, will take so much time here. It also means that it's really fruitful presentations. And suggested that we almost have 5 minutes remain, so let's get some quick Q&A here. So I got questions here. So let's get to the first questions. The question goes, is the Spanish market a 100% corporate PPA market, or could auctions take place in coming years? Hello? Dear speakers?
Yeah, well, no. I think auctions could happen just in this 2020, but still we don't have the regulatory framework for this, but it's not completely, we shouldn't completely reject this possibility. It could happen, but for the moment, yes, 2020 is pure PPA market in PV in Spain. Maybe 2021 as well, because even if we celebrate auctions in 2020, projects wouldn't come online before 2022 in the best case. So yes, it's true, 2020 and 2021 is pure PPA in Spain. After that, we will see. If we have these auctions regulation in the next months, auctions are celebrated. Maybe in 2022 we have auctions projects as well.
Yes, thank you, Alejandro. And I noted that the auction system could be intensively discussed in 2019, especially in the Portuguese market. So, Mr. Pedro, what's your opinion of these auction systems implemented now in the Portuguese market? Hello, Mr. Pedro. It seems like Mr. Pedro is not here with us now. So I'm sorry, maybe we have to jump into another questions. The question is for Mr. Antonio. It's basically the same. Depending on your presentations, what will happen with the auctions scheduled for this year in the Mexican market? Hello, Mr. Antonio.
Yes, well, we're seeing, especially for Mexican market, that we are going to enter into some sort of period in which renewable will be in certain standby. We need to understand what's going to be the position of the López Obrador government, but looks that will not finish well about their intention. For the rest of the countries, we are seeing a positive activity. Most of the countries has arranged, as I mentioned, auctions for late this year. Colombia, Chile, let's see. what's going to happen with Brazil as well. But well, we are quite optimistic already, as I mentioned, auctions must be the driver for the re-entry into the activity of renewable energy in Latin American markets, of course.
Yes, thank you so much, Mr. Jose Antonio. And last questions, it's can the growing renewable share in the market affect the profitabilities of new project margins? Or in briefly, what is your opinions on the cannibalization effect? So we start these questions from Mr. Alejandro, then we're looking from all of our speakers to share your insights with us. So Mr. Alejandro, what's your opinions on the cannibalization effect?
We will see what happens in the market. It's true that PV has quite coincidence generation profile. So this cannibalization effect may affect PV more than other technologies in times of low prices. We'll have to see in the next months and in the next years. Also, electrification measures can be put in the sector, and maybe we can also produce cheap renewable gases like hydrogen at this noon peak. So we will have to see we have to wait and see for this effect. I'm not so sure about this.
Yes, thank you, Mr. Alejandro. Mr. Jose Antonio, is there anything you want to add on these questions?
Well, from my side, I think that cannibalization could happen, especially with the increasing penetration of zero marginal cost variable of renewable technologies. Okay, that maybe could cause a decrease in the wholesale electricity prices. Okay, I think that we need to understand if we can work in the dispatchability of the renewable energy technologies, and probably as Pedro mentioned, I think that the storage could have an important role in this. And well, let's see, because I think that this is something that we need to understand a little bit better as much we will introduce new renewable power into the net. Especially, this is going to happen with wind and solar, but well, I think that it's something with which producers and the rest of the players need to work with, especially grid operators and transportation companies. So let's see.